India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Hello and welcome. Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Friday morning. We're coming to you as always from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Surabhi and Nigel. It may be Friday, but it's action-packed. Lots of news flow to tackle, both local, but predominantly global as well. Guys, hi, morning.
Hi, morning, folks. And I guess it's going to be an action-packed, exciting weekend ahead, right? With the counting due tomorrow. But I think the markets will hope for a little less action, maybe in terms of the negative news flow, so that the bulls have a chance today.
Well, we've got plenty of negative news flow, but on days like this, sometimes things surprise you. So let's see whether we're in for that sort of a day.
Yeah, I mean, that's my thought as well. Let's see, though. It's because tomorrow is the Maharashtra election, and that's one more important trigger in that sense. So let's take it from the top, right? I mean, what you need to know as we begin another session. I'll just start with the dollar from overnight as the highlight. And I said this yesterday morning as well. After a two-day break, dollar index is starting to move back up again. And it's on an upward path. So last night, about 1/3% higher, sort of past 107 levels. Equities, I mean, higher. S&P was up 0.5. NASDAQ was flat. Russell was up 1.5. NASDAQ was flat because Google sold off 4%. And because the Department of Justice wanting to sort of ask them to divest Chrome. But it's also crazy. I mean, you got the new U.S. administration coming, and usually all these appointees get changed. And with 2 months left for Trump to take over and change the entire sort of, some of these top appointees, you're seeing all this kind of news flow. Will all of this actually happen? We'll have to see. But that's the equity change. The 10-year yield was up 1 basis point. We left off at about 4.42%. Data was strong. Initial jobless claims, existing home sales were better than expectations. Oil prices, they went up about 2%. We left around close to about $74.5 a barrel. Bitcoin and, the big 100,000 number we've been talking about, but its trades still about 98,000. I guess we'll get there. The focus is deregulation, and largely because the SEC, the Securities and Exchange Commission chair, there was an announcement yesterday that he's going to leave after Trump takes over. And he's, of course, been pretty strict with Bitcoin, cryptos essentially, and generally on Wall Street, etc. He's not had a very sort of warm kind of reception. Trump's promise, of course, is more market-friendly, deregulation, and him stepping down, I think, gave another leg up as far as Bitcoin is concerned. Now, just two currency pairs I want to highlight. Euro USD finally broke below an important level, which many were saying perhaps will not break. Okay, before that, I just want to address this news flow as well. Then I'll get to currencies. So this escalation between Russia and Ukraine continues. Unnamed U.S. sources to two U.S.-based publications essentially played down the claims of a Russian ICBM, intercontinental ballistic missile strike. And they said, well, it was not one of those ICBMs, but essentially saying it was not a big strike, a new one. It doesn't open a new theater of war, and it's not significant escalation. Unnamed U.S. sources. I mean, that's essentially the key thing here. But I would reckon that escalation fears and comments, etc., persist. And I said this yesterday as well. Till the 20th of January, when Trump is in the White House, I mean, till that point, we will continue to hear sort of escalation and comments really coming through. And that is largely with the view of gaining an upper hand and changing facts to the ground. Because when Trump is in the White House, he's promised that he will end the war on day one, even before actually during campaign, one of his campaign promises. But we've got to get from here to there. And I think from here to there, you will hear a lot more headline. And hopefully it'll be limited and it'll be at the headline level and nothing big and drastic. So currencies, the euro broke below 1.05. It ended sort of under it. The euro region, of course, is one of the weaker economic cohorts around the world right now. Dollar JPY, this was interesting. The JPY went up 0.6% against the USD despite higher US yields, and that is largely because JPY is also a safe haven. And, there are rate differentials, etc., which were playing out as well. Now, I'll come to levels here. I think you are at the point where you start to look for that daily positive close. And that perhaps is going to bring back a little confidence and maybe a little bit of better picture out there. Too early to say if we've completed something from the high to where we kind of were at the day's lowest point, but we'll see. I mean, I think that one should start to sort of reorient yourself in that direction in terms of thinking, etc. as well. So just to put those things in levels, Nifty should not break below the 23,179 number. That's the level on the downside for the Nifty. On the way up, it's the 40 hourly exponential moving average, which is 23,611. Bank Nifty support similarly comes in at about 49,654, which is, by the way, the swing low on the 14th of August. The resistance comes in at the 40 hourly, which is 50,654. We, by the way, got to the 40 hourly on Tuesday, and then those sort of, missile headlines came in the market, it sold off. So these are back in focus again. An important near-term resistance post that after 56.54 is 50,983. As we began by saying, tomorrow is the state election results. Exit polls are showing that incumbents are going to be back in power. It's advantage BJP and allies. But I think you've got to see it to believe it. And probably maybe today is going to be spent in expecting, anticipating and waiting for those results. Monday onwards, it's going to be a better picture. GIFT Nifty on your screen should come up, and that will give you a sense of how we are starting this morning. 80 points higher, which is not bad at all. Surabhi.
Okay, well, if you're looking at hues across the region, it's fairly mixed, one would have to say. And actually, even data has been quite mixed. Just to take off from what Prashant said, in the US, while the jobless claims number was good because there was a decline, 213 versus 220 last week. Look at some of the other indicators that came out. There's this Philly Fed manufacturing survey that comes out, and there that index is in contraction zone. Suddenly it dipped to minus 5.5. This is a November reading. The estimates were about 7, and the previous month's reading was 10. So there's a sudden contraction there. Then there is the Conference Board leading economic indicators index, and that was also down. As October reading came through, it was about 0.4% lower. And this follows a decline in September as well. So, it's mixed depending on how you're reading the picture. In Japan this morning, things are very, very interesting. Actually, the Nikkei is the best performing market in the region right now. The Nikkei is up about 1%. Inflation is still, semi-elevated, you can say. The October CPI print at 2.3. September, we were at about 2.5. The thing is that core inflation, that's slightly above estimates. 2.3 versus estimates of about 2.2, which is why a lot of people in Japan are saying that the BOJ will hike rates in December. They're meeting next month for policy, and they've been on pause the last couple of times because of what's been going on in the US, but they might do a hike again. That's the chatter in Japan. That market's moving higher. Crude, we've already discussed. Because of the headlines that came through with President Putin claiming that indeed it was one of these big missiles, hypersonic missiles, that led to that risk premium. So there's a bit of an upwards bid in crude even this morning. Yesterday was about 2%, and even this morning about 0.5% on the higher side. Just now coming to the market here, yesterday the flow situation is exacerbated because of the Adani impact. The FPI number is well over 5,000 once again, and we haven't seen a plus 5,000 sell number in a while. Yesterday, obviously, it was because of the slam dunk on those shares. Domestic institutions were trying to offset a lot of that impact with the net purchases of 4,200. I'll just come to a couple of interesting stocks. While the market will, of course, hope that we respect the boundaries today, the bulls will hope for at least a little bit of a meaningful bounce. In terms of stock action, Protein governance is something that will be on my radar. The NSE holds about 20% stake in the entity, and it's selling this. Remember, it's diverse financial institutions that have ownership of this entity. They look at data collection, Aadhaar, and so on and so forth, and a lot of our tax-related data points. So 20%. There's an OFS that's coming. And Tata Power is very, very interesting, I thought, because at a time when the Adanis are struggling with their green energy initiatives or this whole talk of scandal and bribery and whatnot, Tata Power went ahead and did some large fundraising with the Asian Development Bank yesterday, about 4.25, and some of that is going to go towards their renewable projects. They just announced something in Bhutan as well. So that's another stock that's going to be in focus. But I guess, Nigel, the bulls will just hope that we protect the lows, have a little bit of a meaningful bounce, and it doesn't get sold into today.
Well, that's right. And in yesterday's trading session, the Nifty was down close to around 170 points. But things were not too bad. And I say that because, the India VIX, that didn't balloon up in yesterday's trading session. Yes, it moved up by close to around 2%, but given the fact we were down more than 170 points, or it wasn't too bad. Even the mid-cap index, periodically that index moved into the green, in fact, during the trading session, and a lot of stocks saw buying interest from the low point of the day. So that's why, though we ended lower yesterday, I'll say it wasn't too bad. But this morning, we're waking up to cues, and when I look at the global cues, the various indicators I look at, the 10-year yield, well, that's still holding at around 4.4%. Crude oil prices moved up a little bit, but they're still at very, very controllable levels of sub $75 per barrel. While the dollar index, that's the worry, that's still holding at around 107. So, taking all these cues into consideration, I think the street would like to go into, the election results, factoring in that the BJP government will do well in both the states. And that's why I believe some kind of optimism will play out in today's trading session. And maybe we see a buy on dips market that plays out, at least for today's trading session. Moving to what did the FIs do yesterday? Well, they added shorts yet again. They added close to 10,000. Short contracts, they continue to remain net short on the index. And as we've been saying in the last few trading sessions, the FIs, they're net long with net short with close to 2 lakh contracts on the short side. While the clients, well, they in fact are net long with close to around 2.8 lakh contracts on the long side itself. So both of them at opposite ends of the spectrum. Moving to the options data, well, we start the new contract, which expires in the next week itself. The 23,300 call and the 23,300 put. Now, the narrow range between this, if there's a strategy playing out, which is known as the short, a short straddle that's taking place. They're looking to pocket close to around 400 rupees and hoping that the Nifty, expires in this range. 400 points higher than 23,300, 400 points lower than the 23,300 odd mark, which gives you a broad range, 22,900 to around 23,700 odd. But if you're looking at a tighter range, the 200 DMA becomes important on the upside. The bulls will want to get past this. And the reference point on the downside comes in at around this 20,263. But the Nifty bank, that will have to fight back. And in yesterday's trading session, the reason that it didn't look so bad is because the Nifty bank went to the 200 DMA and bounced 400 points from those levels. So if you look at the chart, yesterday, in fact, we breached the 200 DMA. And from there, we did pop up as well. The Nifty bank needs to fight back, and that's been showing signs that it wants to do that in the last few trading sessions. Finally, the stock that I'm looking at is Protein. The reason I'm looking at it is because NSE is going to be selling a close to 20% stake that it has. I'll tell you what, it's good for both parties, because for Protein, well, that was the overhang that the market was looking forward to. And this OFS, once it's out of the way, it gets back to business as usual. So, the stock will open up lower, but it could be a good opportunity. That's one. And for NSE, maybe it moves towards the path of listing. That's the sense as well. So we'll keep an eye out on Protein, which is a listed one.
Oh, yeah, absolutely. I mean, that's going to be probably the stock of the day from the interest perspective. But guys, I just want to highlight the dollar once again. I was looking at the move in the last, I think, 10 odd minutes. It's crossed last week's high, 107.09. So the march on the dollar is something. Let's see, I mean, if that spoils the bull's party, it was quite a dramatic move just in the last couple of minutes.
Party should be?
Sorry?
Poor bulls, they're waiting to party.
Hopefully trying to get it started on a Friday, but let's see if they succeed. 107.10 now.
There's an old one, right? They said that I heard it when I first moved to Bombay. I said, well, I think it was one of those bear phases that the only place you can find a bear is the Baikala Zoo. I think you can put the word. I don't think you need to go to the zoo to catch sight of a bull. But anyway, Anurag Singh is with us, managing partner at Ansett Capital, is now with us. Anurag, good to have you with us here. Thank you for your time. I mean, of course, yesterday, I reckon would have been different had it not been for, of course, all the Adani news flow. So where are we now, in your opinion, Anurag? For those who are watching, not just for trading the Nifty or this stock or that stock, but broadly how to kind of look at the market and whether one should be looking to buy things or sit on the sidelines. Where are we at in terms of answering that question?
Prashant, morning. I think... Prashant, if you look at Indian markets, I think let's just look at this broader perspective. I mean, go to 2019, Nifty was somewhere around 2020, start of 2020, it was at 12,000. And I would say, assuming a 12% CAGR per year, I mean, you expect in 6 years, Nifty doubles. So I think even if Nifty absorbs the 2025 year, by end of 2025, it's at 26,000. I think that's a reasonable return to expect. I think that's where I see Indian markets heading to, Prashant, especially in the context of, so much money trying to catch the rally within US and some of the other tactical rallies, say Argentina, say Japan, say somewhere else, maybe in Europe if the war ends, right? So broadly, this is where I think, and ultimately this is in line with the long-term trend of Nifty, Shan. So I mean, I understand there is a bit of a panic right now. Small cap and mid cap is a very different story. I think investors better know what they're doing in that space. But I think broadly for the markets, I think it's a story which really ended up with taking a spike in 2021, 22, 23, and now settling down with a more moderate average 12% CAGR for the returns, which is in line with the broader economy, Prashant, I think. So that's where I stand. That's with respect to the Indian markets.
Anurag, hi. So you're unfazed. Good to know that. In which case, what would you like to buy in India? I mean, the market is off 10% off the peak now, and stocks, many of them are down between 30 to 40% off the peak.
So, Surbhi, I'm unfazed because I'm not, so let me explain you the context. We are 90% in US markets, 10%. So I think we are not typically, our fund is not a replica of how you should take positions in emerging markets, because we don't take more than 10 to 15% positions in any emerging markets at any point in time. So I'm unfazed because I'm here in US markets and you know what it is doing these days, right? So that's all good. But I think having said this, I think, so Surbhi, our approach is very macro, very top down, and we don't really indulge into anything beyond Nifty top 100, right? So we stay within IT, discretionary, consumer, and banking within Indian markets, right? And that's a very macro view. Just to quote an example, Argentinian market is like 45% up in year-to-date terms, right? So we take such tactical positions. That's in no way is an indicator of how Indian markets should be doing or should be, where the potential lies. So yeah, currently I would say we are only positive on banks in Indian markets. Everything else is super expensive. It needs to take a time correction. And that's just a tactical call. It's no way a judgment of how the growth should unfold in Indian markets. Surbhi.
All right. Got it. Hi, Anurag. Good morning. And good to see you in. We keep asking guests whether, how to view India, how to view China. Do you think post-Trump coming in as US president, you could rather see broadening of the US market rally rather than money moving to other emerging markets? Because I'm just looking at the last few days, the Russell 2000 on a day-to-day basis is outperforming, which wasn't the case a few months earlier.
Yeah. So Nigel, look, Russell did not even touch even now it's below its 2021 peak, right?
Yeah.
So it has still not touched the 2,500 levels, right? So I think that has been the challenge with this rally. Even, we understand US markets in a lot of ways, people say is expensive, but it is so concentrated in these 7 stocks. And it's only now for the last 4 or 5 months that the broadening has actually really begun to unfold, right? Even we see on a daily basis, there are stocks which are gaining 5, 6, 7%. So, and that's not a froth, because it's really catching up to the high multiple rich valuations and the safety trade of the technology, super big tech trade. Now, I think in terms of, look, Nigel, we don't have to take it as a, country specific view. I think these are all tactical calls. India is the bright spot. China is just a trade. I don't think, and people I talk to, nobody's making the case as China is turned around for the long term and invest there and go to sleep and all that. People are just taking the tactical trade. These are all tactical positions. India is the only market where people say it's a consistent, bullish, 20-year decadal story. I agree with that. However, the fact is that you should not hesitate to take money off the table when you feel that, there is a bit of, froth in the market. And I think today we are at that point where some money should be taken off the table. Nigel.
All right, Anurag, we'll leave it there. Good conversation as always. Thank you very much for joining us and being here on the program today. So, I mean, that's the first opinion coming through, and we'll get you a lot more. Let's quickly tease out what's lined up here over the next 2.5 hours or so. So 8:35, we'll be joined by the management of PG Electroplast. We talk about the company's foray into EV manufacturing. That's the big one. We've asked them, what is this new line of business? Last time also, remember, the company was on. We put that question to them, what we know now. 9 a.m., we have Rakesh Arora of GoIndiaStocks.com joining in to talk about the outlook on the cement sector. 9:20, Gautam Dugar of Motilal Oswal Financial Services, Market Master of the Day. 9:30, We have the management of Blue Star with us to discuss the company's business outlook. Nilesh Sathe, former IRDAI member, will be with us at 9:40. Life insurance stocks have been under pressure lately after Finance Minister comments on bank assurance. 9:50, you'll hear from IBA Chief Executive. And of course, the situation as far as the banking sector, the new guidelines from the RBI, implications, and of course, Indianomics with Lata. She'll be in conversation with Soral Verma of Nomura and Rupa Rege and we'll also have Pulapare Balkrishnan, professor at Center for Development Studies on the inflation interest rate dynamics. Those are conversations lined up. Stay with us.
For the time being, though, we'll slip into a short break. We'll focus on a lot of stock-specific action. For the time being, we'll run it through the list. We're looking at Tata Power, SJVN, Afcons, Man Industries, ACC. Well, they'll be reacting to positive news flow. Add to the list NLC, JSW Energy, and Emphasis. On the flip side, Protein E-Govern, as well as Apollo Microsystems will be reacting to negative news flow. Slip into that break, come back, get into further detail on all of these names.
Welcome back. Well, the cues are all right. I mean, not too bad, you could say. The question is, what about stocks? And that's the implied open. Look at that. The bulls really want to charge ahead, make a comeback today. Let's see if they can manage to do that. Now, in terms of individual stocks, there's plenty to track this morning, and our team is standing by, as always, with the CNBC-TV18 list of top stocks to watch. Guys, morning and happy Friday to all of you. Vamakshi, let me open with you. What are the names on your radar?
Well, good morning, Surbi. Let me first start off with Protein eGov Technologies. The stock is expected to open lower today, and that is because NSE Investments is looking to sell up to 20.31% stake in the company via OFS, or that is offer for sale. OFS includes base issue of 10.16% equity and has a green shoe option of another 10.16%. The floor price for this issue has been determined at 1,550 rupees per share. It opens for non-retail investors today and for retail investors on November 25th. Since this is a clean out trade coming in from NSE Investments, going with the red for discounter. Apart from that, keep an eye out on Tata Power. The company has signed an MOU, that is a Memorandum of Understanding, with Asian Development Bank. They will be evaluating financing worth $4.25 billion for several of its key clean power projects. SJVN is the next counter that I'll be watching out for. They've signed an MOU with the Rajasthan government's Energy Department for development of renewable energy capacity in the state. Under the MOU, SJVN would develop nearly 5 gigawatts of pumped storage projects and 2 gigawatts of floating solar projects in the state of Rajasthan. And lastly, let's focus on Afcons Infra. They have been declared as the lowest bidder for a project worth 1,274 crores from Uttarakhand Project Development and Construction Corp.
Okay, all right. Thanks a lot for that, Vamakshi. Well, let's hop across to Vinny. She's here with some more stocks in the news. Vinny.
Good morning, Nigel. So yes, we have some important news flows coming in for Apollo Microsystems, because we're seeing that the company has received a withdrawal consent from some of the allottees and subscribers for its convertible equity warrants. So we're expecting a red over here. The name of the allottees who have withdrawn their consent is Eminence Global Fund, PCC, North Star Opportunities, as well as AG Dynamic Funds. And the reason is mainly because of the delay in opening the preferential offer. Moving on, we have Man Industries that's in focus. We're expecting a green year. Now, the company had spoken about divesting its non-core assets previously, and this one is Manerios Shelter Private Limited. MSPL is what the company is calling. They're looking to divest the stake, and this is going to happen in the next 3 months. The company MSPL, that is a wholly owned subsidiary of Man Industries, had around a 200 crore revenue in FY24. So keep an eye out on this one. ACC, NLC, as well as JSW Energy, they're going to be in focus because they're among the 5 companies who have bagged 5 mines at the first day of the 10th round of the commercial mine allocation. So ACC has bagged the coal mine in Madhya Pradesh. NLC India and JSW Energy Utkal has bagged 1 block each in Odisha. So keep an eye on that one. Lastly, Emphasis also is in focus. We're expecting green here as the company has signed a partnership with MoneyGram has F1 team, and this is going to be revolutionizing the motorsport performance for that F1 team. So keep an eye out on that one.
Okay, got it. Thanks very much for that, Vinny. NLC India, remember in a falling market yesterday, was up some 7-8%. And now the news is out. So you know the excitement. Let's quickly recap our list of top stocks to watch. The ones that have positive news flow around them are Tata Power, SJVN, Afcons Infrastructure, Man Industries, ACC, NLC, JSW Energy and Memphasis. While stocks with negative news flow are Protean, e-Governance Tech and Apollo Microsystems. Okay, so those are the stocks to watch today. What about the commodity cues that we're getting? We have Manisha with us for a quick roundup. Manisha, the countdown is on. 100,000 USD. Is it happening or not? Bitcoin.
You know, as it happens when you're waiting for that very important psychological level, it tests your patience as well, and that's exactly what Bitcoin seems to be doing. So near yet so far is how we are trading with it, and it's trading exactly at 98,000 even as of now. So it looks like before this weekend ends, and by the way, there are no weekends for cryptos as well. Remember, they travel 24/7. So, well, we could be looking at that number. But the gains also have come back in many of the commodities. So when you look at the gold prices, we are trading at a one-week highs now. The prices have gained up by 4% in this week. There is safe haven buying, and intensifying Russia-Ukraine tensions clearly seem to be supportive. Same is the case with crude oil prices. These gained 2% overnight. There is an OPEC meeting scheduled for 1st of December. It would be interesting to see if OPEC yet again postpones increase in output production. Apart from that, there are various Fed official speeches as well slated for today, so the markets would get the next direction from that one.
All right, Manisha, thank you very much for that. So that is the picture coming through with the commodities space as well. We'll take a quick commercial break here. Siddharth Khemka is going to be joining in for some fundamental stock talk. We'll also, as promised, have the management of PG Electroplast join in on their new foray. Stay with us.
Welcome back. So let's get you a very interesting exclusive conversation now. This is about Zepto. Now, Zepto has raised $350 million in what is the largest 100% domestic fundraise for a private startup in Indian history. The quick commerce delivery platform's co-founder, Adit Palicha, spoke with Shireen about the rationale behind the company's fundraising and why he's chosen to go all Indian.
You know, when we spoke in August, you said you're not looking at raising any more money. What's changed?
We raised over $300 million. It's the largest 100% Indian fundraise for a private startup in the history of this country, right? And we're proud of it. The reason why, when we started this financing, we had over $1 billion of net cash in bank, no debt, right? We're growing well. And the reason why we raised this capital, candidly, is because throughout the entire life cycle of Zepto, we've always wanted to bring on board domestic capital. Both, Keval and I are excited about the fact that we can build like an Indian company that people can be proud of. But there never really has been risk capital of that scale available to private startups. And so, we pushed, I remember from the Series A onwards, Series B, Series C, Series D, we tried to get domestic investors on board, but it wasn't the right time. We saw an opportunity here with Motilal Oswal and their team, and we went into it not really with many high expectations, but we were able to pull it off, and we're quite excited about it. And the rationale behind doing a domestic fundraise is fairly simple. We had over $1 billion of cash in bank. Now we've got over $1.3 billion of cash in bank.
Yeah.
But this domestic financing just helps us increase Indian ownership going into an IPO. We think that benefits the company long term. One, just public trust and shareholder trust going into a public company. It's better to be owned by high quality Indian names, right? And historically we've been limited to Silicon Valley VCs that are not very familiar, or that Indian institutional investors and Indian retail shareholders as well are not familiar with. And B, even just from a regulatory and government lens, we think being an Indian company is favorable. And lastly, it's the ambition that Keval and I have always had to build like an exciting Indian company.
But is that the real rationale, of being Indian-owned so that the FDI regulations, especially the FDI regulations to deal with retail and e-commerce, don't necessarily constrain you?
So, number one, I mean, even today, we are 100% compliant and respect FDI laws. Right? We've, essentially maintained the same successful e-commerce models that have existed in this country for over a decade. Right? And we've built a lot of depth, not just in FDI compliance, whether it's for a fairly young company having a Big Four statutory auditor, right, with and pulling off a financial year closure with no qualifications. That's one example. Whether it's GST compliance, whether it's income tax compliance, whether it's even our best efforts on FSSAI compliance, we've worked hard there. So we're not concerned about FDI compliance. We feel confident in the work that we've done, and we're compliant.
Not necessarily compliance. What I mean is that do you feel that the FDI regulations don't give you the flexibility to do the kinds of things that you may want to do? Because we're given to understand that this is what Zomato is looking at as well as it grows out Blinkit, and which is why they did this big fundraise as well.
Yeah, no, look, it's less about the FDI rules opening up more business avenues. It's more about, being an Indian-owned company and putting that debate to rest on, as we get to larger and larger scale, is an Indian company or a foreign company?
Well, and you can catch excerpts of this exclusive interview all through the day only on CNBC TV18. Well, as promised, let's get chatting about PG Electr Plus. The company's arm, PG Technoplus, has announced its foray into EV manufacturing and has signed a definitive agreement to manufacture Spyro EVs in India. To talk more about this development, we have with us Mr. Vikas Gupta, the MD Operations at PG Electr Plus. Hi, Mr. Gupta. Good morning, and thanks a lot for joining in. Well, you had hinted last time around that there's something coming up, and that was bang on what you announced late last week. Tell us more about this. Does the company have a capacity for the EV segment, or do you have to put on fresh capex? If it's going to be fresh capex, what is the number we should be looking at?
Good morning, Nigel. So basically, this is exciting, and the company itself is very excited about this entry into the EV space. So basically, Spyro is Africa's largest two-wheeler EV company. It has been recognized as one of the most, like Times 100 most influential companies in 2024. So we'll be setting up a new capacity. So we do not have an existing capacity to get into EV manufacturing. So we plan to set up a new capacity to do EVs. The investment in this will be not very large. The investment will be around a couple of $1 million in that. And I think the overall, we are very excited on this.
Couple of million, could you quantify, sir? How many million? Couple could be anything, right?
So it can be around a range of around $3 to $4 million to
How
start
is that, Mr. Gupta? Hi, good morning. $3 to $4 million for an EV manufacturing, that seems quite low, frankly.
So please understand, Prashant. Yeah, Prashant, good morning. So basically, it will be purely an assembly line setup right now. The local value addition will be quite low, but as the business grows and we are able to scale up the volumes, we'll be going for a further capex and maybe going for the increase in the localization content. So
right now you're getting all the parts imported. You're assembling it here to be sold here in India. That is the arrangement.
Yes, so the local value add will be almost around 20% right now. But we aspire to take it to a level of around 40 to 45% in 2 to 3 years' time.
Last couple of times when I asked you what a new line of business, which you've kind of hinted at, you said it's an adjacent line of business. I mean, EVs are completely new. So I just wanted your thoughts. I mean, how come EVs? I mean, it's not a question to really ask. EVs are probably the future, but it's a different shift, right? It's a new direction for you in that sense.
So Prashant, please understand there are a lot of things which go into the manufacturing of EV are similar to the kind of product manufacturing that we are doing right now. It involves a lot of plastic molding. It involves a lot of PCBA, electronics. And so that way we feel some of the assets will be fungible and we will have opportunity to sweat some of the existing assets in a better way.
Mr. Gupta, okay, let's talk money. So you said that as of now, the investment is only about $3 million, but give us the whole game plan. I mean, you're saying that value addition will increase over the years. And I think the last conversation we had, your existing capex was around 380 crores, and you were anyway looking to add some facilities to your existing line of business. So tell us, what is the capex for the existing business now? And FY25 is, virtually over. Let's start talking FY26. And as this EV business scales up, what is the realistic number that you will have to put to work over, say, the next 2 years?
So, Surabhi, please understand, for initially the capex I told you will be around $3 to $4 million. Yes, definitely. Our existing capex of 370 to 380 crores is already in line. And we are hoping that we'll be able to complete that capex by the end of FY25. For FY26, we have still not firmed up our numbers, but we'll be releasing our guidance on FY26 going forward. Maybe in the last quarter of this year, financial year, we'll be making our guidance on the FY26. And we are just doing our number crunching on that. Specific to the EV business, we are hopeful that in next 2 to 3 years, we should be able to scale up this business to a revenue size of almost around 500 to 600 crores. So that is what we are looking at. Please mind it.
With what sort of an investment, sir?
Margins.
So revenue, revenue is going to be 500 to 600 crores. And how much will be the investment over the next 2 years?
So the investment I told you initially will be around $3 to $4 million, but maybe going further, maybe it will be total to an extent of around $5 to $6 million cumulative over a period of 2 years. That's not a large investment. What will happen is, because there is a high asset turn business, the overall margins might not be very attractive, but it will meet our guardrails regarding the return ratios of ROC and all that.
So margins would be how much? I think, at a company level, you're around 8%, give or take. If I remember the numbers correctly, what will the margin for this business be then?
So, Surabhi, as I told you, we are not looking at the margins specifically in this. So we are looking at the ROC and ROE because the asset turns will be very large in this. As I told you, when we are doing a capex of almost around $3 to $4 million and we're generating a revenue of around 500 crores. So we will be trying to maintain a ROC of around 20 to 25%. That is what we are targeting in this.
So the asset turn is going to be nearly 10 times, right? Because you're going to be putting around 50 crores down and getting revenues of close to around 500 crores. Is that correct?
Yes. Yes.
All right. And just one quick question, and if you could tell us, till FY24, if I look at it, the company Spiro, they sold roughly around 12,000 e-bikes, I think, across Africa. So what would be the volume commitment by the African government to Spiro? And what would be the volume commitment from Spiro to PG?
So, Nigel, we are still doing the final crunching of those volume numbers. Initially, we are looking at, but Spiro is setting up their own domestic sales and distribution network in India. And they are trying to tie up with the quick commerce companies in India. And I think there will be a kind of agreement that they'll get into. And we have some kind of firm numbers from them, but still that numbers is something that we are working on. Maybe we should be targeting a number of almost around 20 to 20,000 kind of EVs in the full year of operations.
Okay, we have a bunch more questions. But Mr. Gupta, we're completely out of time, so we'd request you to come back and take us through some more of the details. Interesting announcement. And of course, it's an area where there is a fair bit of excitement. So that's PG Electro Plus. Stock, of course, after the announcement did very well. It ended about 1% higher yesterday. We'll take a quick commercial break. Okay, I think we have Siddharth Khemka now joining us. Siddharth, good morning. Good to have you with us here. You heard the management of PG Electro Plus. Any thoughts at all?
Yeah, I think the plan sounds good, but as we see, the competition keeps heating up on the EV side. So really, we need to understand the volumes, the commitment that they get before we can jump to any conclusion. But on the prima facie, it looks like a good plan to get into the EV space.
Okay. Hi, Siddharth. Good morning. That's PG Electroplast, PG Technoplast now, the entity through which they're doing this. But since we're talking EVs, let's talk about, autos overall. Starting with Ola Electric, never a dull moment when it's Ola, right? Yesterday there was news. I mean, we were picking up source-based news. There are layoffs at the company. Then there is Mahindra & Mahindra making big strides in EV. So if you're looking to play the EV theme, what's your favorite stock?
Yeah, hi, Surbi. Good morning. So yes, I think the auto sector continues to be in buzz with a lot of developments. If you look at the latest monthly data, even for October and YTD numbers, the two-wheelers have continued to outperform the passenger vehicle segment. The two-wheelers ICE segment grew at 14.6% in the YTD FY25 compared to a muted 0.6% growth for passenger vehicles. And if you look at within the two-wheeler segment, the ICE scooter segment posted 18% growth. The motorcycle segment has seen around 13% growth. And Honda Motors is the only player to gain market share in the two-wheeler space. So you see, while the passenger vehicle segment kind of seems some stagnant growth, we believe that going forward with the wedding season picking up, I think two-wheelers would continue to outperform the overall market, and hence within the ICE segment, what we like is a Hero MotoCorp. Valuations are comfortable, strong presence in the entry-level segment. We are seeing good recovery in the rural market. Urban is what is kind of showing some stagnancy, and hence I would say with the ICE segment, the better is to play through the two-wheeler segment, and where we like Hero MotoCorp.
Okay, I said good morning and good to see you in. What about Protein e-governance? I am not sure whether you tracked that one, but the street has been waiting by. This large block was awaited. Now it's going to be done in the next couple of sessions. Not a block, the OFS, where NSE will scale down their stake, which will be good for NSE shareholders because hopefully that moves in that direction of listing. We'll have to see how that goes. But for the listed company, this was an overhang, goes out of the way, big runway for the company. Your view on it?
Yeah, good morning, Nigel. Yes, so unfortunately, we don't track Protein e-governance to that extent, but what we see is that this entire digital space doing well, both in the government as well as in the overall digital payment space. So I think this is a segment which will continue to do well. Some of the companies that we do track, not closely linked, but to some extent are CDSL, CAMS, which are again in the digital space. So what I would say is that yes, it's a big overhang which would go away, and from here one should see positive reaction from the market for the stock.
Sid, I don't know if you heard, we played out, Zepto has done a large round of fundraising from local investors, and it values the company at $5 billion. Swiggy market cap is some $10-11 billion. This one, Zomato is double that. 2,30,000 crores. Just your thoughts. I mean, one way to look at it is more competition, right? Zepto is getting fully funded, etc. The other way is, what does it mean in your opinion for the other two listed players, Swiggy and Zomato, in your opinion? And do you like them?
Yes. So, Prashant, if you see, most of these players are kind of building that capital to kind of play the growth in the quick commerce space, the quick delivery, so which requires a lot of investments in the dark warehouses, in the delivery channels, in the inventory, and I think that is where the competition is heating up. So while Zomato itself is planning to raise funds through QIP, it has already started generating free cash flows. We saw Swiggy with the IPO raising almost 10,000 crores, and now Zepto raising funds. So the space is definitely getting more and more exciting. What we like within the three, obviously Zepto is not listed, Swiggy just got listed, and Zomato is something that we have been liking a lot for a couple of quarters since now. We have a buy rating on Zomato with a target price of 330. We also have released a report on Swiggy post the listing. What we believe is that while we like the quick commerce space, we believe that the profitability, part two profitability is still some time away, and hence there is a delayed gratification that we could see in Swiggy. So we have a neutral rating there, but the target price that we have set is about 475. So I think this space will keep getting excited. Within the listed space, we prefer Zomato with a target price of 330.
Okay, all right, Sid, request you to stay with us for the time being. We'll slip into a short break. On the other side, we'll be joined by technical experts, Mitesh and Shrikant, are waiting for us. Welcome back. Well, as promised, we have Mitesh as well as Shrikant who join us on the show. Good morning, gentlemen. Thanks a lot for joining in. Well, yesterday it was a weak trading session, but not as bad by the time we wound up. Mitesh, you go first. What do you think about today? On the index, yesterday you told us no big view because, too many moving parts. But do you have a view for today?
I do, Nigel. Good morning. So I think the index which I'll watch closely will be the Bank Nifty. A couple of reasons. One, the Bank Nifty bounced back from its 200-day average. Two, I think it was clearly the stronger index, obviously not enjoying any kind of, linkage with the Adani group, particularly though some PSU banks would be lenders and, you might want to argue about the effect over there. But broadly, I think it is the Bank Nifty which is looking good. And, as long as this bounce back from the 200-day average continues, the Bank Nifty could possibly head towards levels of around 50,900 to about 51,000. And beyond that, it could catch or it could gain more momentum. So I think I'll keep a watch on the Bank Nifty. Let's see where it opens and then we'll take a trade over there. But I have a couple of banking names in the recommendation. So the idea is that to lead slightly towards the financial names today.
No, got that. Gentlemen, good morning. Thanks very much for joining in. Shrikant, what about you? How would you look at things now?
Good morning, Prashant. Good morning, Nigel and everyone. I think, markets are correcting from the highs, but now we are down nearly exactly 3,000 points from the highs. The highest was around 26,270, 280, and yesterday's low was around 23,260, 270. So while looking at the setup of the market and based on retracements and averages, I think we are very close to the short-term important support levels from where we can see some recovery. But since last 7-8 days, if we see the trend of the market, then it is like failing to close above the highest of the previous day. We need today the market to close above at least the levels of 23,500, or if we see the market is crossing these levels, then we can see some further more bullishness in the market. Broadly, I am of the view that the markets are due for a very meaningful pullback in the near term, but I think we need some reversal formation also. So today, in case if we see the market is closing above 23,500, then yes, we can see very sizable pullback in the near term. For the Bank Nifty, there also, as Mitesh said, it recovered very well from the lows. Since last 3 days, it is not falling below the levels of 50,000 convincingly. So yes, we can see the levels of maybe 51,000, 51,500.
Okay, all right, got that. Mitesh, you go first. Tell us about your individual stocks.
Nigel, I have, as I said, a couple of banking names on the list today. So I have a buy on Kotak Bank with a stop at about 1720 for targets of 1770. Also a buy on Federal Bank, disclaimer that we have some positions here, some bullish biased call spreads. So Federal Bank for me is a buy with a stop at 206.75 for a target of 218. That apart, a buy on Divi's Lab with a stop at 5920 for targets of 6,100, and IEX makes the final buy call. It's at a very clear, important support level, very likely to bounce back. So keep a stop below 158, 157.5. Look for a target of around 168.
Okay, all right. Shrikant, what about you?
Yeah, I think, banks are really placed at important support levels, and they are well placed to take some short-term trades. In that specifically, private banks are doing well, and ICICI Bank looks good, which is around some 1260, 1270 sort of levels. From here, the stock can move to the levels of at least 1300, 1325, and we can keep a stop loss around 1225 for the same. The other stock on which we are bullish is Mahindra and Mahindra, and whenever there is some rally or some recovery in the market, we see some specific buying interest in Mahindra and Mahindra. Currently, it is around 2390 or 2350, 2360. But from here, the stock can easily move to the levels of 3010 or 3050. So Mahindra and Mahindra is also at current levels buy recommendation with a stop loss at 2920.
All right. Thanks very much, both of you, for joining us. Shrikant and Mitesh, we'll touch base again soon with your 9-10 calls. I think we are heading towards the pre-open session, which is 3 minutes away. We'll take that quick commercial break here. Before that, we'll come back. We'll have a discussion planned on the cement space. Rakesh Arora will be with us to tell us and talk to us more about that space. Stay with us. Okay, welcome back. We've got the pre-open session starting to come up, and we'll just take a look at what the rates are. The first rates are on your screen, 70 points lower. So that's about 1/3% down. 23,286 is where the Nifty first rates are coming through. So this is, I mean, if this stays like this, and the end of the pre-open by about 9:07, 9:08. We'll see, but it's going to be pretty different from what the GIFT Nifty was indicating earlier on. The rupee market has also opened, the currency market. I think we've got, and I think there is some additional weakness after yesterday's weakness as well. Just quickly take a look at the Adani Group stocks. I mean, just run through those names if we can, because, we'll just look at what happened, because yesterday, of course, everything was down sharply. Enterprises, ports, green. We should put up Adani Energy Solutions, Adani Total, and others as well, power, etc. So yeah, I mean, there is added additional pressure coming through after what we saw yesterday. The cement names are up on your screen as well. Cements and Ambuja Cement and ACC, which are down. But this is the very initial first rates which are coming through. We'll have more as we go along. Sneha Sheth is with us, derivatives analyst, research analyst at Angel One. Sneha, good to have you with us here. Good morning. Thanks for your time. Just your sort of setup as far as indices go and your specific trades.
Very good morning, Prashant. If you look at market, yes, we have been seeing continuous selling pressure. Apart from that, if you see market, anytime, whenever we are seeing a bounce back, it is not getting sustained. So that is certainly not giving us a comfort to go long at this point in time. So in case of any strong recovery, only and above 23,800, 24,000, then only we would, recommend adding any long position. At this point in time, we would suggest stay out of index. And in case IBs, which is around 16 now, if it goes up above 17, that would not be a good indication. So at present, avoid index, trade into individual counters. We are seeing decent, trade setups there. So my first counter would be around power grid. If you look at this counter, we have seen decent up move yesterday. It was up nearly 3% yesterday from the a good base formation is now done around 310, 305 zone. So I would recommend buying this counter for the target of 350, and the stop loss can be maintained around 310. Apart from this, Grasim looks good. Though we have seen a decent selling in other cement counters, here we are seeing decent base formation around 4,700, 2,470, 480 odd zone. And looking at the overall chart structure, I believe we may see some short covering bounce here. So for the target of 2,620, it's a buy, and the stop loss can be maintained around yesterday's low, that is around 2,480.
All right, thanks a lot for that, Sneha. Well, talking about Grasim has something to do with the cement space. So let's focus on the cement theme itself. Yesterday, we saw Adani Group cement stocks. They were under pressure. Deep cuts is what we saw. ACC and Ambuja, by the way, have corrected close to 30% from the 52-week high. So do these Adani cement assets provide an opportunity after the fall? Valuation-wise, well, they could appear fairly palatable. But let's find out from Rakesh Arora, the founder at goindiastocks.com, who joins us. Hi, Rakesh. Good morning. And thanks a lot for joining in. Well, these stocks have fallen off the cliff. There are a couple of those tangible assets that the group has, the Adani Group has. Do you think that they're providing an entry opportunity? I ask you this because a few months ago, we did see that these stocks fell off the cliff. And from there, we had a big rally. Your take.
So, Nigel, Ambuja Cement, etc., do look cheap, and they have fallen quite a lot as compared to their peers. And in the recent past, they have done really good acquisitions. So 2 years back, when Adani's took over Ambuja, since then they've added 43% in terms of capacity. So that's a massive, increase. Plus the cost reductions have also been quite impressive as compared to the, other players in the industry. So I think fundamental wise, there's nothing much to worry. It's a good, asset to own. Having said that, it's difficult to call what's going to happen on the case which came out on Adani yesterday. But one thing, which stands out that among all their assets, I think probably this is the one which is the least impacted. It's quite well funded, and historically we've seen cement companies don't really need too much of external capital. They can grow. They don't really have too much of regulatory issues to deal with. So I think if one has to take a bet on the whole group, maybe this is one of the safer assets to look at.
Okay, all right. So would you be a buyer though at current levels, Rakesh? And what would the pick be? Ambuja Cements is trading at a discount in comparison to what it normally trades at, while ACC is trading below replacement cost. But it's for a reason, because profitability is lower out there. How would you approach them?
So clearly, meaning market perceives that there could be short-term volatility, and if there's some adverse decision making at the court case that we are seeing, probably some of the FIs might be forced to sell. That can, give stock a little bit more supply to deal with. So if one is not worried too much about the volatility, valuation-wise, it looks decent.
All right. What is the pecking order, though? The big boy UltraTech Cement. I remember when Adani's made the foray into the cement industry, people were saying UltraTech is going to be in trouble. Well, actually, it's gone from strength to strength. It's done organic growth. It's done inorganic growth as well. And it's nearer to its highs that we've seen. Instead of playing ACC Ambuja, would you rather play UltraTech as well as Shree Cement?
So, see, UltraTech is working like a well-oiled machinery. They have gone from strength to strength, and they've delivered, and that's why the valuation and, So if somebody wants a steady, 12-13% kind of CAGR return, UltraTech is the stock to go to. If you need more excitement in your life, I think Ambuja has more to offer on that.
Yeah, but the street wants a lot of excitement, right? They want to play some of these mid-cap companies that could potentially get acquired. We have seen the Adani Group gone into some trouble even in the past, but that inorganic growth trend did continue. They went and picked up a couple of assets and decent side assets as well. Do you think that consolidation theme takes a bit of a backseat? And anything you like from the mid-cap universe, mid-small cap universe?
So I don't think, acquisition will slow down materially. Meaning we have seen that acquisitions have happened at regular interval. Every few months, they've been able to acquire some decent asset. So it started with Sanghi, then Penna, and now Orient, which was, an excellent acquisition. I think now there are only 2 or 3 large ones which are left, Heidelberg and probably some assets of JP are still there, which are of decent size, between more than 10 million ton. Others are very small assets, so it doesn't really matter that much. So consolidation, I think, will continue. Maybe there might be a lull of a few months here and there, but what we need to keep in mind that most of the acquisitions are happening between $80 to $100. So if the assets are good, maybe $100, and if assets are a little bit weaker on the side than $80. So investors can take a cue from this range and decide accordingly.
Yeah, got that. I remember the management of Shree Cement talking about this. They were with us on the channel just a couple of days back, saying that, they'd rather not pay too much above that amount that you just mentioned, the reference rate in the market. But Rakesh, hi, morning, Surabhi here. So, the consolidation aside, what about the actual, demand and supply situation? Because things have not improved. It's been so many quarters, right? Offtake has been weak. There's no sign of any kind of a price hike. And first it was the monsoon, and then the narrative was that the government is not spending. Now second half is supposed to be better. We're already in second half. So what's going on? In terms of just the business on ground, and what do you expect over the next couple of months?
So fortunately, after the weak first half, we are seeing green shoots in terms of demand. So October was probably, I think, 5-6% demand growth. November is going to be a much bigger, maybe 15% plus demand growth, given that it was a low base effect last year. And overall for the quarter, I'm expecting around 8 to 9% pretty easily in terms of demand. So demand looks sorted. Prices have not been sticking because most of the companies, both the large companies have been very aggressive in pushing their product in the market. So there's a little bit of market share gain or rather market share war going on, which is hindering prices from going up. But there will be benefit from this, volume growth which is coming in. So margins sequentially will improve by say 100 odd to 150 rupees per ton. Going into Q4, I think price increases will also come through because government ordering is now going to pick up, and probably Q4 a lot of people will rush to complete their budgets. So at that time, I'm expecting that margin should also recover. So this is a seasonal cyclical play, we all know. And buying in Q2 or Q3 and selling in Q4 or Q1 of next year is a seasonal trade that most investors should do.
All right, Rakesh, we'll leave it there. Good speaking with you, and we don't need more excitement, as you said. There is enough and more to set the pulse racing. Thank you. Well, let's get the 9-10 calls out of the way. Mitesh is here with that. Mitesh, what do you have?
I'll go with the buy on Kotak Bank for targets of 1770.
Okay. All right. Kotak Bank is the 9-10 call coming in from Mitesh. Well, the city gas company should be in focus today. MGL, the Mumbai-based company, is announced, I think, a 2 rupee price increase. The question is it enough after all the cut in allocation? Sonal is here to tell us. Sonal, morning.
Good morning, Prashant. Well, yes, it's a price hike which was anticipated, but it's just a 2 rupee price hike that has come by. It takes the total price to 77 rupees a kg. This is applicable from today. And the last time we saw a price hike was back in July, around 1.5 rupees per kg. As we know, this price hike has come on the back of this big cut in APM gas allocation. But as you asked, is it enough? Well, they have taken a 2.5% price hike now, but calculations suggest all these city gas distribution companies have to take a price hike anywhere between 8 to 10% in order to pass on the entire cost to the customers. So it's not enough, but though of course it'll take care of some of the margins, and still there is more price hike which is required, but that could impact volume. So it's again a gamble that the company will have to take, but the stock is higher. IGL will also be in focus because if they follow suit, that would also mean that they'll also go ahead and hike prices.
Sonal, thanks very much for that. So not enough for now, but maybe the first of many required price increases. Keep an eye on those names. Reliance Industries is the other one we want to focus on. Sudarshan is here to tell us why. So good morning.
Morning, Prashant. So two notes have come for Reliance Industries. The first one is JP Morgan. It has an overweight call and target is 1468 per share. It says one of the two drivers of the recent underperformance is weak refining margin, which JP Morgan believes that it has now started reversing. Also, it says poor retail top-line growth is difficult to anticipate, but expectations have compressed, and post the stock correction, estimated implied valuations for retail business are 25 times FY26 EBITDA, and valuations for retail business are now below historical levels and peer retailers. Another note is from Morgan Stanley. It has also overweight call and target is 1662 per share. Again, it also says that refining margin is starting to recover after two tough quarters, and permanent refinery capacity shutdowns have also risen. It says FCA engine should pick up pace as nearly 0.6 million barrel per day of refining capacity shuts in 2025 globally. So overall, both Morgan Stanley and JP Morgan remain positive on Reliance Industries.
Yeah, and that pickup in refining margins, that's something that the market would be really willing to take with both hands. By the way, just want to say in the pre-open, while the Nifties are actually up about 60 odd points, that's not too bad. The Adani Group stocks, there's still some red on them. Not as much as yesterday, but down between sort of 5 and 7-8%, depending on which one you're looking at.
Absolutely. Let's actually look at ports, right? Ports yesterday made a low of about 995, and then it recovered very sharply to almost $1,100 and then sold off towards end. So 1,072, down about 4%. That, of course, is the, in that sense, the cash cow, the most widely held institutional name, and of course, I mean, the best assets out there in the group as well. So we got the market open coming up in just a couple of seconds from now, and we'll get on with it in terms of indices, stocks, news flow, everything. So what do we have? First rates, it's higher by, I think, about 50-60 points, 23,400 plus, but dithering And the first couple of seconds, actually, the Nifty Bank is up 0.4%, 50,588 on the Nifty Bank. The sensex is about 0.25% higher right now. What do we have? I mean, did we see some red, or was that fleeting? I think we just refreshed that. I saw some sharp changes, but 0.1, 0.15 odd percent on the Nifty and the sensex basically is what you're starting with. The Nifty Bank is more clear in that sense with a 0.5% odd pop. Mid caps are flat, small cap index is also absolutely flat. On the Nifty, the heat map is up on your screen, and I think you've got about 14-15 names in the green, with the rest which are starting down. And of course, you can see enterprises and ports, the two Adani Group stocks, are amongst those in the red right now. Surbhi.
Yeah, well, 50 points up on the Nifty. So it's a bit tentative, but I think it's holding, at least for now. Gainers include the likes of ONGC. There are some banking names right on top. Actually, the Bank Nifty is doing better than the Nifty. It's leading from the front. So ICICI Bank, 1%. There's SBI up about 0.7% as well. Let's do a check on HDFC Bank and what that's doing. Yeah, also 0.5% higher. So your big banks are really participating today, which is good news for the index. Reliance, we just discussed some of those brokerage notes, sounding quite optimistic on the refining business pickup. 0.5% up on RIL as well. There is, apart from this, there's Wipro, NTPC, Tata Consumer, Infosys, HUL. These are the early movers on the upside, and plenty of them are the large cap heavyweight big boys. So that's good news for the index. The index, by the way, is now notching up a gain of about 66 points. So the bulls are trying to build. On the downside, on the index, there's, of course, Adani Ports. Then there is Titan. A couple of steel counters, actually, a little weak. JSW Steel and Tata Steel are on the lower side. On the Adani Group, just to complete the picture, most of them are down between 4 to 5%. Enterprise is down about 3%. Power down about 3%. Adani Green is still down about 8.5%. So those are some of the early trends. Mid-cap index, though, already in the red.
Well, that's right, Surbhi. And a few stocks actually are deserving special mention. You have Acume Drugs as well as Zagel. Though both those two stocks, 5% circuit, both of them higher. The Adani Group stocks, Green, Energy Solutions, Power, Total Glass, Ports, all of them are lower. InfoEdge, that's the stock actually of the morning, because there's been an upgrade note coming from Goldman Sachs. They've upgraded the stock to buy from sell. The target price as well has moved up from around 5,700 to around 8,600. They believe the demand environment for India IT is incrementally improving, and they expect this to drive an acceleration in the company's recruitment segment revenues to around 16% CAGR in the next few years. So that explains why that stock, well, just take a look at it. Big move is what we're seeing out there. Cross, the recently listed company, that one as well is up close to around 4% as we speak. Shobha is another stock that's doing well. I think there's a note that's coming from Investec. The stock is up close to around 4% or thereabouts. I think they've initiated coverage on that one with a good target price. So that one, Shobha, after correcting, I think from around 2,000 rupees to around 1,500 rupees, one of the reasons why the stock is doing well is because of this note. The other one is Genesis. That stock as well is up close to around 4%. Not too bad on the headline index. We're up close to around 60 points. We're still holding on to those gains. The bulls will want to build on from here. So let's see how that goes.
Protein's really interesting. I went back to check the price at which NSE is selling, and that price is fairly lower compared to the current market price. NSE is selling its 20% chunk at about 1550. Price on the screen after this 8% decline is also 1700. So these days, when you have large blocks in the market, usually people love it, and that too for companies where they seem to understand a growth runway. But here, I think this pricing is a little disappointing.
It's an OFS, so that's a base price. That $1,550 is the base price, and then they'll be bidding on top of that. So that's why, in fact, that's the base price that they have put out there. So I guess that's what's playing out.
All right, so basically you got about 50 odd points on the Nifty, 23,400 around there at this stage. And by the way, look at individual names, and the number one volume-led gainer. It's not the top gainer percentage-wise, but it's got volumes, and the largest volumes is Nalco. Nalco is up 1.25%, and stocks at about 251 or so right now. There is, I think, InfoEdge, Nigel just mentioned. SJVN is up about 4.5%. It's got large volumes, third largest volumes. Afcons is up 2%. Afcons is a recent listing. Didn't do very much post the first couple of days after listing. KRN Heat Exchangers is up about 4%, 791 on KRN. There is Godrej Properties, which is up about 2.75%. Kernix Microsystems is up 4%. NLC India is up 2.5%. Sobha is up 4%. Sobha is 1580 now coming through. Oil India is coming up with about a 3% gain. There is Zaggle, which is up 5%. Zaggle did well, I think, yesterday as well, 486 or so on Zaggle. NIIT Limited, 4%. You know, look at this Jush Engineering. He's done phenomenally well. I think the stock was $20 in 2018-19. Stock's at 600 plus now. And they from what I remember, they essentially make these metal closures. I mean, you know, it's up big time. I think there was a roadshow recently for Jush, JASH. I rarely ever mention the name, but it's got volumes, and that's why I'm talking about it. IMFA is another one which Nigel has been talking about last few days. Did well yesterday. It's up another 2%, 814 on IMFA coming through. Now, overall market breadth is also shifting a little bit. And you've got 1450 stocks which are higher and 660 stocks which are lower. So decisively swinging towards more up than down. It was pretty close when we began the session a few minutes ago.
Well, just want to point out 3 stocks in the Adani Group. One is ACC Ambuja that we just discussed, with Rakesh. So because of the valuations, because of the potential of these assets and their tangible assets. So, both these two, they've recovered from the low point of the day. And the other one I'm looking at is Adani Ports. It's down close to around 2%, but in the first tick, it was down more than 5-6%. So a bit of bottom fishing, I think, is what we're seeing on all these 3 names. Keep an eye out on the 3 of them. Though the group still, there are plenty of queries, plenty of question marks as well. Investors will be a little bit nervous, but I think these 3 names, from the lows, they've seen a bit of a bounce.
Absolutely. And I think the high and low yesterday was 1160. And on the lower side, it was 995. It was the opening level. I mean, it barely lasted. It bounced and closed at 1114. We're at about 1088 at this point in time. But I think let's get on with our first management post.
Absolutely. And the company in question is Blue Star. We're looking at trends in the second half of the year now. The second quarter was a fairly stable one for the company. The management has been quite optimistic about growth in the current financial year. And we have Mr. B. Thiagarajan, MD at Blue Star with us. Thank you so much for joining in. Always a pleasure to listen to you and to have you on our shows. And it's probably the right time to ask you this. I'll get to the numbers and the second half projections in just a bit. But the second quarter threw up this big question mark on the health of the Indian consumer, on spending trends and whether there is some down trading, especially in the urban markets. Now you tell us all the festive season is behind us and now we're getting into the winter months, which are typically, not the greatest for your business. But where do you stand with respect to demand on ground? How are the festive season sales for you? And what is the forecast ahead?
Good morning, Shurbi. Thank you for having me in your show. This is a doubt that I keep, asking myself that many sectors have slowed down. Why room air conditioners market segment is doing extremely well. The festive season was extremely good. Coming after a great summer season, I thought that the festival season may not be good, but again, it was close to 30% growth during the festival season. And going forward, of course, it is off season, but I'm comparing with the previous year. Now, it continues to be good. This category is doing well, and I'm sure we will end the year. The industry will end the year on a high note, and Blue Star also will end the year on a high note. We had gained market share in Q2. I think we will continue to do so in Q3 and Q4 as well. The reasons, according to me, are as follows. I'm stating that with a caveat. Still, our industry also can slow down. It's not in my hands. But going by the sentiments in the market and the consumer behavior, I think we will continue to grow. The reasons are as follows. Our category, the penetration levels are still in the order of around 8%. That's point number 1. Point number 2, a huge manufacturing capacity has come up, so the prices are stable. If one will have to earn the PLI, you have to show incremental growth over the base year, which is financial year 22. And then the prices are kept stable by the industry. Third is consumer finance is available in plenty. Close to 50% of our sales, even during festival season, was through consumer finance. No longer power bills are a concern thanks to the energy labeling scheme. The air conditioners are very efficient, and if someone is using for 8 or 7 hours a day, I don't think the power bill they incur is substantial. It's lower than even a mobile
Mr.
app when
Tyagarajan,
put together pay.
Sir, just kind of putting it together so we know the factors that you're driving at. You're saying, A, there's been no slowdown in the room AC segment. You've actually seen market share growth. And it's because of the fact that pricing is stable. There's easy, financing available. So therefore, there's no concern for you. Now, since, you're fairly optimistic, just tell us how much was the market share improvement that you saw? And for the full year as a whole, given, the strength that you just spoke of, what will be your full year top line growth estimates?
See, I'm going by the market data that is available. In Q1, though we grew more than 57% in room air conditioners, we lost out on market share because we didn't have material. We could manage only up to that kind of growth. In Q2, I think we have gained some 100 basis points, Q2 standalone. But Q3, Q4, it's an intense competition exists there. And I think on the whole this year, if we gain 50 basis points market share, I would be very happy. From 13.75 to 14 to 14.25, if we move up, it is fine. You remember that FY25, our goal was to reach a market share of 15%. It has not happened. Because you have to ensure that your margins are managed as well while you are chasing the market share.
Mr. Tyagarajan, good morning. Stable pricing and healthy sales seem like a bit of a, I would have imagined lower pricing and healthy sales. But you're saying there's no need for lower pricing. Or has that happened? There's 30% growth in festive sales. Was there a lot of discounting?
No. It was stable pricing, even though the commodity prices had gone up. The last price increase was on 1st of July. And the price was stable. You had seen in the margin figures as well.
Okay. And you're saying that you expect trends to continue. As you see it, there should not be any, although you did throw in that caveat that it's possible that the slowdown could hit the AC segment as well. But for now, it's looking good.
Prashant, my assessment is that it will be good. But I've also always maintained this is like a T20 cricket. All that it requires is some 4 weeks. It can dramatically change.
But for the time being, it appears you're in top form, in this T20 game. You've got it under control.
Of course, and we only pray that our brand ambassador Virat Kohli comes back to form.
Absolutely. On that note, we're all with you, and hopefully King Kohli has one great innings left, and particularly in Australia, I'm hoping I'm backing him. But
lost 2 wickets just now. I just heard from our, our people outside. That's separate. That's on cricket in Australia, but back to the question.
Yeah, since we're talking about overseas, tell us about the export opportunity. You'll have been hinting at that, there is an opportunity out there. So as a percentage of your total mix, how much is exports? Where do you see this number scaling up to? And any kind of slowdown out there?
It has not taken off. On the contrary, we have been a marginal player in the exports market. Our footprint was only Middle East and North Africa, and we decided to enter the Americas as well as Europe. And this is through the OEM route. We were not willing to launch our brand out there. We were to make decarbonization and high energy efficiency products for Europe as well as US. The testing and validation of products for a couple of customers are over. And I'm happy to report that in US, we have a customer. In Europe, we have a customer. But unfortunately, Europe market has slowed down. You'll be reading the reports that it is yet to take off. And I think it is going to be 4 to 5 quarters before European market takes off. US, as everyone is waiting, the new administration, how these programs will be fast forwarded. But we are not in a hurry. We are trying to replace Chinese vendors, which means we have to get the product right in terms of quality and we have to get the costs right. And if we are entering those markets, it should be providing high returns and high margins. It is good that the market is not exploding now. It is giving us time to perfect our offerings. In 2 or 3 product categories, we are fully ready. We will keep adding new OEM customers now.
Okay. So just to wrap it up, I mean, clearly the room air conditioner segment, that's really firing up for you. You spoke about some of the other segments as well, particularly on commercial refrigeration, which is the part of the business where there was sluggishness, the margins were under pressure. For the full year, what can you guide? I mean, when does that part of the business come on stream? And if you could just leave us with a sense on, will the business grow at, overall business, will it grow at 20% this year, more, less?
I will talk about all segments. The electromechanical project segment, where we are not chasing market share, but the free cash flows and the margins, it is doing extremely well. Driven by data center and manufacturing sectors. I think overall that business should grow around 15% on a full year basis. Commercial air conditioning business, which is shop, showroom, boutiques, to large spaces where we sell equipment, commercial air conditioning, that should grow over 20%. There is absolutely no doubt about that. We are sitting on huge order book. And commercial refrigeration had a setback in Q1, and Q2 it has just stabilized. I think overall the revenue growth will be only 10%. It has got nothing to do with the market, but the regulatory changes and our getting back to producing products such as newly designed water coolers. Room air conditioner, my full year outlook is at least 25%. It will be, in fact, it can be even 30% growth for the full year.
Okay. It's always a pleasure, Mr. Tyagarajan, not just to hear about, Blue Star, but also about the industry, which you put so well. Thank you so much for being here on the program today. That's the management of Blue Star. With us, well, the market's up 180 points. And it's instructive to note that, the Adani Group stocks have also recovered quite a bit. Adani Ports is barely down. Enterprises is barely down. Power is barely down. Adani Total is actually in the green as we speak at about 603. And the recovery in the market has also kind of matched the recovery from the lows here for some of these names as well. So, I mean, a lot of it, of course, is sentiment related as well. Gautam Dugar is with us, Head of Research, Institutional Equities at Motilal Oswal Financial Services. Gautam, great to have you with us here. Thanks for your time. I'm going to get to, your earnings estimates and how it's moved because Q2 was bad. A lot depends on the H2. But I want to start with, the investment from Motilal Oswal into Zepto. So Zepto has raised $300 million, $5 billion valuation. Ramdevji himself is putting money in. He's already an investor. But I think the company is also putting money in. I know you have coverage on Swiggy and Zomato as well. So just talk us through how this fundraise changes the game and what are your projections here? Are these still good plays for retail investors? Go on.
Good morning, Prashant. Thanks for having me here. The investment that you're referring to in Zepto has been done by our asset management firm, so I won't be able to comment on that. But as regards the broader point on quick commerce, we are very hot on that space. Been holding Zomato since 50 rupees in our model portfolio, and we still like this space. We've recently put out a coverage on Swiggy, which is very detailed, granular analysis of all the 3 different businesses of Swiggy. The fact remains that this is a very rare segment within the overall consumption space because as we all know now, overall broader consumption space has slowed down. But within that, there are pockets of, sub-consumption segment as one may refer to, which are growing at a very breakneck speed. And the kind of scale that some of these companies have achieved in the last 2.5 years, or maybe 3 years post-COVID, is phenomenal. So, and we have seen it in the case of Zomato over the last 3 years. When they listed, they were loss-making, and within no time, now we are projecting a profit of almost 3,000 crores. So it's a big company with big market cap and very high growth. The fact remains that the segment is still evolving. So while we've already seen 3-4 years of good growth in the spaces, if you look at the next 5 or 10 years, I think it's quite probable that at an industry level itself, we might clock a growth rate CAGR of 20% over 10 years. Of course, today 20% for this segment may look less because they are growing at 40-50%. But if you stretch that out over a 10-year period, at a top line basis for the industry as a whole put together, 20% is a very good number. And as of now, there are only 2 or 3 players with size. So definitely there are going to be a lot of winners in the spaces. Difficult to say who will be the biggest winner. So it makes sense in our view at least to put a bet on 2-3 names. As far as our own model portfolio is concerned, we've been holding Zomato and continue to stay positive on it.
Hi Gautam, good morning and good to see you. Before we get to the earnings and the way the government is spending, and that's going to help us in the second half of the year. Any of these Adani Group stocks have come to levels that you like it? You'll have an official call, I think, on ACC in Abuja as well. They have corrected 30% from the peak. Your view?
Hi, Nigel. I was referring to your comment on Kohli. Kohli is out, by the way.
I know. Kohli is out. Yeah, that was unfortunate. 40 for 3. Hopefully, we can put in a bit of a fight. I had a dream of going and watching the game Boxing Day, but I've postponed it for the next year, I think. So, or the next time we go down there. Difficult times, but I'm sure our boys will bounce back.
Hope so. To referring to your question on cement, no, we don't like cement as a space. We don't have any exposure to cement stocks in the model portfolio. The numbers are very bad, actually. And I think the numbers are going to look weak over the next 2 quarters, too. This was incidentally the 5th consecutive quarter of a double-digit profit decline in cement. If I look at my coverage universe itself, I think we have seen somewhere close to 45% profit decline for our coverage universe put together. As we move forward, March typically is the best quarter for the cement sector. We will see how things pan out by then. Definitely not at the moment. We don't have any exposure to cement stock. We are actually playing industrials theme through capital goods. We are playing industrials theme through real estate and all, where some prices have corrected. And in fact, while the overall earnings season was very muted with a very flattish performance at an aggregate level, but if you look at the sectors, then capital goods stands out because they were able to beat expectations. We have seen close to 17% earnings growth in capital goods versus our expectation of somewhere close to 10-11%. And even at a top line level, they've beaten expectations with a very strong 20% top line and EBITDA growth. So very few sectors have managed to beat the top line expectations. Capital goods is one of them, right? So we are positive on L&T, we're positive on Cummins, capital goods, basically ABB also now that stock is down 20-25% from the recent highs because there was a blip in the quarter. So capital goods is the way we are playing the industrials theme rather than cement.
Got it.
Capital goods, okay. And that ties in with the theme as well. Hi, Gautam. Morning. Great to have you on. Ties in with the expectations, right? Everyone's expecting government spending to start picking up and in general, the sense to start, improving for the capex part of the economy. So that ties right in. But what else? If I were to ask you about areas of the market which will give the best second half earnings growth, apart from capital goods, what would it be?
So Surbhi, yes, you're right. Capital goods should do well. Apart from that, the spaces that we have liked, and in fact, we've recently, 6 months back, we moved IT from underweight to overweight. And we've doubled our weight in IT between the last 6 months, from 8% to 15%. And if you look at the performance, IT sector stood out in the last 3-4 months in the current phase of market downturn. Earnings has also been decent. We're expecting pick up there. Our preference within IT lies in mid-cap, not really mid-cap nowadays, because both Persistent and Coforge have reasonably big market caps. Within the mega cap in IT, we like HCL Tech. So as regards your specific questions on sectors which are expected to do well, we do expect the second half to be slightly better than first half, because the first half, our coverage universe has 0 growth and Nifty at 4%. Now, in the second half, we're expecting our coverage to move from 0% to 9% and for Nifty to move from 4% to 7%. So that's how we get a full year 5% earnings growth for Nifty. But, there are a lot of, nuances in this. If you look at the numbers excluding commodities, which I usually do, the next commodities, Nifty, the first half growth was 12% and second half growth is also about 10 to 12%. And similarly for our broader coverage, first half was 13%, second half was 13%. So whatever variations you are seeing between the two halves of the FY25 earnings is largely or completely coming because of commodity-related fluctuations. As regards sectors where we are still expecting good growth and are positive on it. So I mentioned IT. Second is BFSI. And within BFSI, we like the non-lending financial space more. And we've also moved private banks recently in October preview to overweight out from underweight after a long 2.5 years period. And also we like healthcare, select bits of consumer discretionary, telecom. So those are 5-6 spaces, and of course real estate where we are overweight. We are expecting the growth to continue to remain strong. Right?
Okay,
but overall, the year is going to be quite soft on aggregate earnings basis.
And I guess a lot of that is in the price, right? That explains the fact that we're down 10% from the peak. Somewhere when the reality catches up, the question is, what do you start playing from here on? And you've given plenty of ideas. Very quickly, Gautam, before we let you go, we were just looking at some notes that came in from a bunch of foreign brokers this morning on Reliance. They were talking about how, in general, refining, the cycle will start picking up. And it should be good for Reliance, and I'm sure other refiners as well, global refiners. Just want to get your view here, because like you pointed out, commodities have been the culprit in pulling down Q2 numbers, some of the commodity-facing sectors. What would your sense be? Because if Reliance starts moving higher, and we know it takes the market along with it.
Yeah, I absolutely agree with you on the first point. So we've had a 8% earnings downgrade since April, and the Nifty is also down about 10-11%. In fact, if you look at the broader markets, the 3-year CAGR is very, very ordinary now. We've seen just 10% earnings. Basically, the Nifty return CAGR. On Reliance, we are still underweight, so because we think that not just the refining and the O2C business, but even the retail business has slowed down a bit because of the overall demand slowdown that we are witnessing in the the modern trade part of the consumption basket. So I think while valuations have corrected, stock has corrected, in the near term we don't see much of a trigger out there. So and because it's such a big weight, it's very difficult to go overweight there as it is, even when the earnings are doing well. But at the moment, we are underweight, and we are using that weight to, basically allocate more towards sectors where the earnings visibility is far better right now.
Okay. Your 25 Nifty EPS and 26 EPS estimate now, Gautam?
Yeah, Prashant, so we are at 1,057 for FY25 now, which is a downgrade of about 1.5% from the preview to review. And for FY26, we are close to 1,240, which is an earnings growth of close to 17%. So now, if you look at FY22 to FY25, our earnings CAGR would be somewhere close to 12-13%. Sorry, on a 3-year basis, it is still 20%. The FY25 year is going to look very, very soft at about 5%. But then FY26 obviously evens out that base. So net on a 5-year CAGR, Prashant, we've seen close to 20% earnings growth now for Nifty. And this is the first year of single-digit earnings growth after 4 consecutive years of very strong double-digit performance.
Got it. Thank you very much, Gautam, for joining us. Appreciate your time here on CNBC-TV18. Have a good weekend. We'll catch up again. Nilesh Sathe is our next guest. He's former IRDAI member. He joins us to discuss the outlook for the life insurance space. The finance minister raised question marks about banks selling insurance products. So we'll take that break. We're going to come back in just a bit. Welcome back. Now, the finance minister raised concerns about insurance mis-selling, emphasizing its contribution to higher borrowing costs for consumers. She urged banks to focus on affordable lending rates and not burden customers with needless insurance products. Listen.
Trust should be built by the way you offer your portfolios, by the way you offer your service, and by the way you look at each customer's requirement without clubbing them into one class. Particularly in the context where banks facilitate the distribution of insurance products. I wish to say this for due consideration of the bank's boards. While this model has significantly contributed to improving insurance penetration across the country, it has also raised concerns about instances of mis-selling, and I would say contributed in indirect ways of increased cost of borrowing for the customers. So banks will have to look at it with a lot more emphasis on their core banking activities and not burden customers with insurances which they don't require.
You know, insurance stocks after those comments have come off between 5 and 7%, depending on which name you really look at. We have Nilesh Sathe, former IRDAI member, who is joining in, someone who really looks at the space pretty closely. Mr. Sathe, good morning. It's always a pleasure having you here with us. Now, there is absolutely, the finance minister is absolutely correct. I mean, insurance products should not be missold, and customers should not be saddled with bad products, and absolutely correct. Why is the market worried? Because there was also a hint that maybe banks should focus on their core activities, right? Not so much on allied activities like selling insurance products. Now, banks are the largest channel for sale of insurance products across the board. How do you look at this entire thing? It's not a directive. I mean, it's the FM urging, but your sense, sir?
No, good that FM has raised this issue. Mis-selling has to be curbed, stopped altogether. One correction, banks are not the biggest channel. It is the second biggest channel. The individual agents still dominate the market. Second biggest channel definitely is bank assurance, which is called banca channel. And the third is brokers and all that. So any channel for that matter who is mis-selling, strict action needs to be taken. Now, why mis-selling may be happening in case of banks? One is probably there may be a directive from the top that your fee-based income must go up and they must have some targets. There is no reason to give targets for this, because if somebody is borrowing, then to the extent of his credit which he is taking, he needs to be insured, because in case of his death, how the recovery of loan will be made. But while doing so also, you should not force the customer to buy a product which the bank wants him to buy. And that is why IRDA initially, when it found that especially the banks which have got insurance companies, they are marketing products only of their insurance companies. IRDA said you should tie up with three that is two more insurance companies and give option to the customers to buy. This was one. So many banks which are selling insurance products have now tied up with three insurance companies, and now IRDA has allowed them to tie up with nine life, 9 general, and 9 health. But then the fact remains that there are many cases of mis-selling in case of banks, and good that the chairman IRDA as well as Honorable Finance Minister, they have got this into their radar, and something should happen. But then why it is happening? Probably the reason is IRDA is also responsible for this, because initially there used to be commission regulations in which the highest rate of commission that can be paid was prescribed by IRDA, and any violation in that would be seen very seriously. Unfortunately, it has now been removed and merged with the expense of management regulation. Means overall, if you are within the total expenses of management, then whatever rate of commission you want to pay or whatever benefits you want to pay, you can pay to the distributors. That is something which, in my opinion, is not correct. There needs to be a ceiling on commission. This is one part.
Specifically on commissions. Yeah.
Ceiling on commission, yes.
Yeah. Not merged with the expense of management. Mr. Sathe, yeah, absolutely. For our viewers and investors, is the banca channel under threat, in your opinion?
I don't think it is under threat. Actually, banca channel really has spread the insurance to the nooks and corners of the country, because individual agents cannot reach there where the bank branches are there. So obviously, it has definitely helped the insurance sector to perform better, to increase their spread and penetration. But at the same time, what happens, the bank manager is so powerful that if he says that you buy this policy because I am giving you loan, the fellow even doesn't apply his mind and think whether this is really required for me or it is useful to me.
You are very well connected in the industry, and you speak with has a directive gone down about sort of asking banks right from the top to stop offering incentives, commissions, targets, basically, as you said, for insurance sales? Has that happened? And because of all of this, will insurance sales go down, in your opinion, through the banca channel? Will the end
No,
result
I
be
don't
that?
think. No,
Yeah.
Prashant, I don't think it will go down, but it needs to be streamlined in the sense there has to be some methodology in selling, you know. You should not keep on, somebody comes for a fixed deposit and you are giving him a single premium policy. That is not correct. But at the same time, even the customers also should look at the policy when he receives that if it is really useful for me, is it the one which I want? And if not, IRDA has now prescribed that within 30 days you can return the policy and say that I'm not interested in this. That can be done. But then not many are aware of it. Again, there may be some pressure from the branch manager. So the question is, that is insurance education is required, no doubt about it. People should be more careful while buying insurance and should not blindly follow what maybe the branch manager or somebody is saying. Not just branch manager, even the agents are also mis-selling. I'm not saying they are not. But then because FM has raised about banks, probably it has come to the limelight. But mis-selling needs to be curbed.
Absolutely, sir. And as someone who has tracked personal finance on this channel for many, many years and who feels strongly about the issue, I totally take your point that as customers, we need to be far more aware and ask questions beyond, isme kitna milega? We are too fixated on returns, and that's where the mis-sellers have a field day, right? So yes, it is joint responsibility. But having said that, it's also fair. I mean, while in a letter, it's easy to return a policy in 30 days, like you're saying. In spirit, it's not. I mean, you ask people when it comes to giving back their policies or stopping policies is still not very easy. So coming back to the central question.
No. I differ with you. It is very easy. And a lot of people, they do make use of this free look cancellation.
Yeah.
And the entire amount of money which is paid by them is returned. And if they do not return it within the prescribed time, interest is to be paid on that.
Absolutely. So that's what I'm saying. The framework is there. Now, coming back to the central question, however, now that this has been raised at the highest level by the finance minister herself, do you expect a change in functioning at least at PSU banks? And do you expect the influence of the banker channel to go down? Will, at least in PSU banks, will we see lesser push? So will policy sales go down?
See, number one, as it is, the share of PSU banks in the total banker channel is not significant. Significant is of the private sector banks. But yes, targets are given. Now, probably proper monitoring will be done, at least in case of public sector banks. And if at all mis-selling cases are brought to the notice of top management, how many free look cancellations have been made, if that is noted, then probably proper action will be taken against the branch managers who are forcefully selling the policies as mis-selling. No doubt about it. But good that this has percolated down. And the chairman of the CMDs of the public sector banks as well as private sector banks, I'm sure will take the advice of Honorable Finance Minister very seriously. And they must take. So there is no justification for mis-selling or forced selling, I will say.
But again, to my question, whether policy sales will come off, you think no, right? Should not.
No, I'm not of
because
that
of
view.
this.
It will not impact much. It will not impact much. Because see, out of the total policies sold by banks, the policies so-called mis-sold is a very small, meager percentage, but it is still there. Now, nothing wrong in curbing it. It will not impact the overall sale because it is not everybody is selling policy wrongly to the customers. It is not so. There are a few elements which, in order to maybe for getting promotion, how much target you have achieved out of so on and so forth. There are many things. A couple of bad elements in the banks probably are doing it the way they should not do it. And if that is stopped, I'm 100% sure that it will not impact the overall sale of bank assurance channel.
Okay. Mr. Sathe, we'll leave it there. Thank you very much for joining us. It's always a pleasure and great clarity. And thank you for explaining that entire issue to us and our viewers as well. Appreciate it. I think we got the market sold off, by the way, very sharply. We were up about 160, 170 points. And there was about a 100-point drop from the day's high. We were up only 60 points 2 minutes back. And then in the last 5 minutes, markets picked up a little bit again. You can see that. We're up 100 points once again, but still 60-odd points off the day's high. And you look at the Adani Group stocks, which they've fallen a little bit more. They'd all come back into being in the flat zone to actually even in the green, some of them. But look at some of them, they're all down a little bit more again. So there is that selling pressure, 3.5%, 4.5% cuts coming through here. Adani Energy Solutions is down about 7.5% at this point in time. But there is a bit, so the overall market is not, feeling the heat. We are still trying to come back up. Standalone refiners have started to come up. Look at MRPL. It was not there in the mix in the morning when we started. Actually, both MRPL and Chennai Petro we should have up on our screens. So 155 on MRPL and Chennai Petro is the other one, which will also be up on your screen. Look at something like a Wockhardt Pharma, which is also zooming as we speak, 4.5%. At least I didn't see it in the morning when we began at 9:15.
Just one more. The reaction on Mahanagar gas, it's self-explanatory. There is this price hike that's come in, about 2 odd rupees, but it's not even a drop in the ocean, I guess, considering the kind of, escalation in cost that's happened with the cut in the APM gas allocation. So the stock started with a pop and it's completely fizzled off. Now it's, there we go. It's turning red already. So no excitement there on that price hike. Okay, so that's the stock screen for now. Let's go across to Mitesh and get some trades in. Mitesh, great to have you back. So it's wobbly, it's choppy, but it's still positive. What are the trades now?
I think, bounce backs tend to be choppy. So I think that's pretty okay, actually. That's good. And you will see these ups and downs happening. But we're still trading with long buys. Early in the day, I was talking about financials. Right now, I've added a few more names over here. Ipca Labs, looks like slightly turning positive. So keep a stop at about 1565. Look for a target of roughly around 1640 here. And the other one, which could possibly do well, and is looking slightly stronger in the last few hours, is Infosys, which I would recommend buying with a stop at about 1830 for targets of 1880.
Sorry, what are those trades? I missed the individual names, Mitesh. What are those?
Prashant, Ipca and Infosys both on the long side.
Ipca and Infosys on the long side. Okay, just a few other names, if you will, allow me to ask you. One is Wockhardt, zooming 5% now on the name, and real estate is coming up. Lodha is up 3, Godrej Properties is up 3.5. I saw Sobha in the morning. I think it is still up some 4-5%. Anything there?
So real estate, Prashant, I'm not sure. The one which I like is is Godrej Properties, but it's after being up 3.7% today, it's nearly it's hitting those supply levels of around 28.40, 28.50. We're not very far away from that. So maybe around those levels you will see some profit booking coming. But if it starts getting past those levels, I think Godrej Properties could possibly see continuation by about another 100, 120 points on the upside. So that's the best in the short term. And the other one was Wockhardt. Sorry, I'll just complete on that. Wockhardt is a very good pattern. I think the first resistance for the stock is around 1265 odd level. So that's one. And beyond that, I think the stock chart is showing potential of heading towards 1300 levels.
No, Mitesh, I actually wanted to ask you about Protean because the company is going through some corporate developments. There's some news there. But otherwise, it's been a stock that's performed really well. In fact, we've got Vamakshi. So let's talk about this news at hand. The fact that NSE, which has been one of the largest stakeholders in Protean e-governance, is finally selling its 20-odd% stake. Stock's under a bit of pressure. Vamakshi, fill us in on the details.
Well, absolutely. So, Protean e-governance under pressure today, and that is because, NSE Investments is looking to sell up to nearly 20.31% stake in Protean eGov Technologies via OFS, that is offer for sale. Now, the offer for sale includes a base issue of 10.16% equity and also has a greenshoe option of another 10.16% equity. The floor price for this issue has been determined at 1,550 rupees per share. Now, the OFS has opened for non-retail investors today and will open for retail investors on November 25th. But this is a clean out trade that is coming in from NSE Investments, and therefore the stock is seeing a bit of a pressure today.
Yeah, absolutely. It's a large chunk of equity that's coming into the market. Vamakshi, just hang on because we want to talk to you about InfoEdge as well. Before that, Mitesh, just to complete our stock check for the morning, Protean, like I said, and this is not today's call that we're asking about, but in terms of a medium-term chart, how does the stock look?
So apologies, I think I've not been tracking the stock because I think it's only listed on BSE.
Okay. All right, Mitesh, thanks very much. We'll let you go on that note. But back to Vamakshi. Vamakshi, what's up with InfoEdge?
There's a brokerage note that has come in from Goldman Sachs. They've gone ahead and upgraded their rating on this counter from sell to buy. They've also raised their target price from 5,700 to 8,600 rupees per share. So massive upgrade coming in from Goldman Sachs, and resultantly the stock is soaring in trade. Now what they say is that they believe the demand environment for India IT is now incrementally improving. In fact, they're expecting the company's recruitment segment revenues to grow at a much faster pace of almost 16% CAGR from FY25 to 28, as compared to 8% that we saw in the from FY23 to 25. As far as the other segments are concerned, they're expecting 20% plus revenue growth outlook for 99 acres. They believe that scale as well as stable competitive intensity should help the company achieve break even in calendar year 25. They're quite bullish on Zomato as well, which accounts for nearly 33% of the company's market cap, and they see both upside risks to the estimates as well as multiples for the company. So overall, it's a very bullish note coming in from Goldman Sachs. Thumbs up for InfoEdge, and resultantly the stock is soaring higher.
All right, Amakshi, thank you very much for that. Just want to address the listing, the new listing today, that is Zinca, which I think will come up on your screens, and we'll have the rates up coming up on your screen in just a bit from now. There you go. It's starting. It's a flattish kind of start, 1.25% higher. 276 or so is where it's making its debut this morning. We'll take a quick commercial break here. Manisha is going to be here to focus on the commodity space, and a lot to track there as well. Stay tuned.
Welcome back. So the equity markets have chosen their color for the morning, and it is definitely green. Let's figure out what's the latest in the commodity universe. We have Manisha with us now. Manisha, so what's catching your attention today?
Well, the green is spilling over definitely in case of commodities as well. I can say very clearly that 8 out of 10 commodities are trading in the positive. But I have chosen energy because while it continues to consolidate within that range, but overnight gains have been on the stronger side. 2% up for the crude oil prices, and with that, it's headed for the best week in last 2 months. Well, the support comes in from escalation of tensions between Russia and Ukraine. Let's not forget that Russia is the second largest producer of crude oil and exporter as well after Saudi Arabia. So there are those concerns and premiums coming back into the market. Apart from that, the street will watch out for the OPEC and allies meeting that is scheduled for 1st of December. And yet again, the expectation is that this could be a third time over that you could see output productions being postponed by yet another month or even quarter for that matter. The third important point comes in from China, which late last night announced boosted trade by announcing policy measures there. So that clearly has been supportive. Also, there is support for energy product imports as well. When you look at the month of November, the numbers really stack up quite well there. The China crude imports for the month of November are estimated at the highest in 3 months at around 11.4 million barrels per day. So China has been a big concern when it comes to crude oil prices. And if at these lower crude oils, China is importing crude, then that could support prices going forward. But it's not just about the crude prices. Everything within the energy basket seems to be doing quite well. The natural gas prices are trading at 1-year highs. We've seen 7% of gains in the overnight market. And it was day before yesterday that we saw natural gas prices gain up by 6% as well. So it clearly has been a 15% of a jump up in matter of 2 days itself. Well, prices have seen support because of forecast of colder weather in most of the Western world. And that is lifting the heating oil demand there. Apart from that, when you look at the markets in sense of numbers, EIA suggests that the gas storage has declined by 3 billion cubic feet per day in the previous week. This is versus an estimate that you could see a build-up in case of storages there. Also, when you look at the European Union, well, the gas storage there also is below 90% of capacity, which is less than 5-year average of 91%, also supporting the prices there. And as of now, the Russia pipeline that flows via Ukraine is not hampered with, but with the way the escalation of war is going on, well, markets are taking that premium in prices also. I want to take you through on what we've done in sense of prices on a week-on-week basis. So while the crude prices are up by 5%, and that's exactly how we have seen gains for heating oil and gasoline as well. But natural gas, clearly an outperformer, 23% of gains in last 1 week is what we are trading with.
All right. Look at the market. Manisha, thank you very much for that. We are ripping higher, 240 points on the Nifty. And look at the point is the reason, and it's a very sharp surge. So already, we started, we opened today at about 23,400, surged to 23,550. That was a 150 point odd move in the green. Then we sold off to about 23,400. Sharp sort of fall from the day's high. And then from there, which at about 953 is when we made the low, we come up how? The reason, of course, is that positioning is extremely light. I mean, FIIs are short, and you're essentially getting to levels from where there have been rebounds in the past as well. And I think that is the reason why, you're seeing a very swift and without very much selling on the higher side, market coming through very, very quickly. The biggest contributor to gains is ICICI Bank. If you can have the ICICI Bank stock up, 45 index points from ICICI. And the stock should come up. Reliance is at number 2 with a 25-point index push. There you go. ICICI, 1280. Reliance with a 16 rupee gain is adding 25 index points. So that's, about 70 index points between ICICI and Reliance. And then you throw in an Infi, SBI, TCS. That is another 40, 50 odd points. So that is the bulk of what is actually contributing to gains at this stage. So it's a pretty good day, all told. But this is still very much the first hour that we're talking about. I just want to take a look at the Adani Group stocks as well. Here there is still some pressure. Of course, not as much as yesterday, but by and large, between 2, 3, 4% kind of cuts coming through on the that particular pack. The market performing, even though you've got this issue at the margin. So it's turning out to be a decent Friday, a pretty good Friday after the spate of selling that we've seen so far. We're going to take a quick commercial break here. That's, of course, the market update for now. But programming will, of course, continue with our special segment. That's Indianomics. My colleague Lata will be in conversation. And they'll talk about inflation, interest rate dynamics. So that's a panel you'll see on the other side in conversation with Lata. Stay with us.